In 2021, the price of a single Bitcoin, the leading cryptocurrency, broke $60,000. And the market value of all cryptocurrencies reached a staggering $2.5 trillion. Bitcoin's promise to create a new decentralized financial system beyond the control of governments and banks has captured the imagination of the world. But so far, the Bitcoin dream has not been realized. Rather than becoming a new form of money, Bitcoin has become a highly volatile investment asset, creating big winners.
Investors have seen its price skyrocketing during the pandemic.
And big losers.
The crypto valuation lost $1/3 trillion just overnight.
For the believers, Bitcoin is still a digital stepping stone towards a utopian future. For the skeptics, the crypto market is nothing more than a digital casino, too volatile to be trusted. So what will become of the Bitcoin dream? It all started in 2009. Somewhere in the world, a shadowy figure, hiding behind the name of Satoshi Nakamoto, created the very first Bitcoin. It was the start of a digital revolution. Bitcoin and the thousands of cryptocurrencies that have followed are nothing like actual coins. They are code, recorded on a digital ledger that gets longer and longer as more people use them. And embedded in Nakamoto's code for the first batch or block of Bitcoins was a newspaper headline. Trust is at the heart of the current financial system. Banks and other financial institutions control how money flows around the economy. Faith that their ledgers are accurate is vital. This is because money is simply a social convention. It exists and has value because we agree that it does. This agreement only works because we put trust in financial institutions, such as banks. Bitcoin does not require trusted institutions. Nakamoto wanted to create a secure system that did not rely on any trust at all. To achieve this, the coins are registered on a revolutionary technology called a blockchain, which is a ledger of transactions that is not held by a centralized institution. Instead, transactions are verified and logged by a network of computers all over the world, in a process known as mining. But it's a complex process. If someone wants to make a transaction, everyone on the network is alerted. The transactions are verified by so-called miners. First, they check the transactions are legitimate. Once a miner has checked a few thousand transactions, they group them together in a block. That's the easy part. The miners then race for the right to add this block to a string of those previously made, known as the blockchain. To do this, they compete to solve a complex numerical problem. The miner that solves it first sees their block added to the chain, and they are rewarded in Bitcoin. This whole process is incredibly energy intensive and is contributing to the climate crisis. As of May 2021, Bitcoin mining used more electricity annually than the whole of the Netherlands. To keep Bitcoin scarce and to help maintain its value, the number of Bitcoins that can be mined is capped at 21 million. To date, almost 19 million Bitcoins have been mined, but it cannot yet be classified as money. For something to be considered money, it has to work in three ways: as a medium of exchange, as a store of value, and as a unit of account. Here's why. Fundamentally, Bitcoin is a string of code with limited use. Like a gold bar, it doesn't produce any revenue. But compared with the price of gold, the value of a single Bitcoin is hugely volatile, and a single tweet can change people's faith in it as a future currency. As a result, its price moves wildly up and down as people buy and sell it. And unlike the dollar, there's no central bank or government to defend its value. This volatility also makes Bitcoin very hard to use as a medium of exchange. So a seller on Amazon is unlikely to accept Bitcoin for their goods, as the following day the price could vary dramatically. As happened on May 19, 2021, The price dropped almost $8,000 in less than an hour. But that's not stopping El Salvador. The Central American country has become the first to adopt Bitcoin as legal tender. It's a major gamble. If Bitcoin doesn't work as a way of paying for things, what gives it value? Like shares and bonds, it's also traded as an investment. This has led to a speculative mania where teenagers have become millionaires.
It's not just maybe a get-rich-quick scheme, as a lot of people put it, but I see it as the future of currency.
And others have lost it all, literally. In 2013, one unlucky man in Wales even scoured a rubbish dump for a hard drive containing 7,500 accidentally discarded bitcoins.
Without that file, there is no way of getting the money back because there is no central server that records a log of it.
Today, that hard drive would be worth $280 million, if only he could find it. But investing in cryptocurrency is no longer for early adopters and armchair investors. It's attracting attention from some of the world's biggest banks, including Morgan Stanley, which now offers investors access to Bitcoin funds. But even cautious buy-in from some financiers brings greater scrutiny. And regulators are also wary because Bitcoin has a dark side. And it's not just criminality that is ringing alarm bells. Leading economists have warned that Bitcoin is a dangerous bubble, destined to burst and join the graveyard of historically hyped-up investments. Like the tulip mania of the 1630s, where the price of tulip bulbs rose sharply before spectacularly crashing, or the dot-com boom in the late 1990s. In 2018, there was reason to believe the skeptics might be right. The sharp surge and later drop in the price of Bitcoin mimicked these historic bubbles, a pattern which continued into the first half of 2021. The price soared to over $60,000, only to fall again. Supporters see cryptocurrency as a burgeoning asset class with real value, more like gold than tulips. But the jury is still out on whether the comparison is accurate. Perhaps the biggest winner from its climb is Bitcoin's mysterious inventor, Satoshi Nakamoto. Assuming, of course, that Nakamoto is a real person who is still alive, they're thought to own more than 1 million Bitcoin, currently worth around $37 billion. Bitcoin may yet become a stable asset like gold, or prove to be a bubble that bursts spectacularly. But one thing is for certain. The utopian dream of Bitcoin becoming a new form of money beyond the control of governments and central banks is still as elusive as the technology's creator.